What is up, YouTube? My name is Daniel and you're tuned into my channel Life with Dan, where we go into different business topics like stock market investing, entrepreneurship, finance, and life decisions. Thanks again for tuning into my channel, and to those of you that are here for the first time, welcome. Thanks so much for checking it out. I'd like to take it back to stocks for today. So what I did is I found 3 growth mid-cap companies that I think are worth putting into your watch list if you don't have them already, and keeping an eye on them going into 2021 and the next few years after that. Essentially, I think these 3 companies have a lot going for them and have a lot of growth opportunity. Not necessarily saying that you should buy into them right now, but we're going to look into them and see what they've got going on. It should be said that I currently don't hold a position in any of these companies, nor do I have immediate plans to buy into them, but I am watching them / have been as of late, and if an opportunity were to come up, I might invest in one of these companies down the road. Before we go into the video, guys, of course, like I've mentioned before, I'm not an actual financial advisor, nor am I licensed to give any legitimate financial investment advice or anything like that. So although I am giving my 2 cents on these companies and, talking about recommendations and what I'm doing with them and things like that, definitely take everything with a grain of salt. Do your own homework, do your own research. I care about your guys' finances, so just remember to always do your own work with regards to what you're going to be investing in. But with that said, I'm glad to be talking about stocks again with you guys. Should be an interesting video, so we'll get into everything right after the intro. So to get right into the first company that we're going to be covering today, guys, we've got Unity Software. Now, you might have heard of Unity Software before if you're a gamer or involved at all in the gaming world. Maybe you've seen their logo pop up while a game is loading. But for those of us that haven't heard of Unity, they are a software company. They provide a development platform with different software solutions that allows content creators to make real-time interactive 2D and 3D content. I know that sounds like a mouthful, but basically they provide different software that allows content creators to make 2D and 3D content. Their biggest content creator customer as of late being video game developers. They have a wide number of video game developers under them using their software every day to develop different kind of games, monetize them, and manage them. The company was founded in 2004, so not that old of a company, and they actually went public just last month in September. They had priced their IPO officially at $52 a share, which was going to raise about $1.3 billion for them, valuing them at about $13 and some billion. But actually, they ended up IPOing at $75 a share, ending the first day of trading at about 68 and some change, which ended up being obviously a much higher valuation. Now it sits at around a $21 billion valuation, trading at around the 80 some dollar per share range. They boast on their website having 1.5 million monthly active creators as of around June of 2020, and actually some pretty cool facts are that 50+% of mobile games, PC games, console games combined were made with Unity software in some way. They also boast having 190 plus countries with creators using Unity, and having 53% of the top 1,000 mobile games on the App Store and Google Store also having some form of association with Unity software. All in all, with their current market that they're addressing, what with video game developers and things like that, and different types of content creators, they think they're addressing about a $23 billion market as of June of 2020. But they think the opportunity that they see down the road is much larger than that as they break out of the video game world and start offering their software solutions to more commercial businesses, as they're already starting to do. 2019 revenue for Unity was looking pretty good in comparison to 2028. They brought in $541 million of revenue, which was up 42% year over year from $380 million back in 2018. And their trailing 12 months revenue is looking pretty promising for what could be a good strong closing to the 2020 year, as we have trailing 12-month revenue of $640 million. The company currently trades at a price to sales trailing 12 month of 29.09. So seems like it might be a little bit on the expensive side. Although a good promising company with growing revenue and an interesting revenue model that we'll go into right now, it's still quite overvalued for the revenue that it's bringing in as of right now. But now to go into a little bit more about their business model and how it is that Unity actually brings in revenue. Like I mentioned earlier, Unity has dozens of individual software solutions that each help content creators perform specific tasks. So although there's several of them, Unity likes to categorize all of them into two different sets. As we can see here from their S1 filing, the way they put it, our platform consists of two distinct but connected and synergetic sets of solutions. They have create solutions and operate solutions. As it reads here, our create solutions are used by content creators, developers, artists, designers, engineers, and architects to create interactive real-time 2D and 3D content. Their operate solutions offer customers the ability to grow and engage their end user base, as well as run and monetize their content with the goal of optimizing end user acquisition and operational costs while increasing the lifetime value of their end users. So there's create solutions and operate solutions, and all the ones falling into the create are all the design stuff, all the creative stuff where they actually make the content, make the games, the animations, the commercial designs, what have you. And then the operate solutions are the specific softwares that allow them to monetize, to monitor, like it said, to engage with the audiences, things like that, right? So it covers the entire spectrum of having to manage your content from creation to monetization. Let's look at how it is that they bring in revenue and how they offer these products. As it reads on their S1, they generate subscription and associated professional services revenue when it comes to their create solutions. So the create solutions where artists are creating different content, those things are subscription based. So whether it be individual creators or companies, I'm sure it's set up different for the different types of entities. It says here we generate revenue share and usage based revenue from the sale of operate solutions. So on the operate side of things, where Unity is helping companies, promote and monetize and engage with the content that they've created, it's more on a usage and share the revenue basis, which is a pretty interesting model that I think is going to benefit Unity, quite a lot down the road. Essentially, the more usage these developers, games, and things like that get, that are using Unity specifically, Unity is going to get more and more revenue from these customers. And as long as the customers continue to integrate with Unity and continue to expand and maybe perhaps use more and more of Unity's software, the retention rate is going to get a lot higher for Unity, and you're going to see just consistent revenue coming in from people that are going to find it a lot harder to break out of the software that they're already integrated into. It says here a majority of their revenue, both in 2018 and 2019, came from customers that contributed more than $100,000 in trailing 12-month revenue. As of June 30th, 2020, we had 716 of these customers and a gross retention rate of 99%, which we define as a percentage of these customers that we retained from the prior year, which comes to show you they're getting really good at retention, at getting customers and keeping those customers as they continue to integrate and use more and more of Unity software. So this all just points to good signs for Unity as they continue to expand outside of helping game developers and moving into more commercial enterprises and things like that. And as they continue to hold and grow market share within the gaming world, I think Unity is set up well to continue growing exponentially for a long time. But anyways, with all that said, like I mentioned, Unity is still quite overvalued, and this is the first month that we're seeing it trade publicly, so I think it'd be wise to just wait on it if you were interested in getting involved with the company, continuing to watch it, look out for the quarterly reports, watch the stock as it continues to adjust and hopefully get to a more fair value level. But yeah, that's about it for that one, guys. Unity Software, ticker symbol U. So now to move on to the second company we were going to be covering today, we've got Polaris Incorporated, ticker symbol PII. I know a lot of you have heard of this company before. It's been around a lot longer than Unity has, but for those of you that haven't, Polaris designs, manufactures, and sells eye-turning, innovative outdoor sport vehicles. They've got a lot of things going for them, and they're pretty much known as like that luxury outdoor vehicle brand. Recently gaining a lot of traction with products like the Slingshot and their ATVs, like I mentioned. Rumors going around of an electric motorcycle soon. Has a lot of people looking at Polaris recently, and there seems to be a sort of a culture shift within the company, kind of a change of pace that to me seems quite promising for where Polaris could be a few years down the road. The company was founded in 1954, so definitely been around a lot longer than Unity has, and as of today, October 7th, the company's stock trades at about $104 a share. One nice thing about Polaris is that they're a company that steadily has been paying a dividend. They currently pay a dividend of 2.45%, as you can see here, and they've been paying it steadily for the past several years. They actually just increased it at the top of 2020 this here. Forward PE on this company of 12.9, so pretty fairly priced there actually, and as we can see here on Yahoo Finance, it even says there that they think it's about nearly priced. So this is actually quite attractive, different situation from what we had in Unity. This is actually something that you could potentially see opportunities to get in the very short term. Price to sales trailing 12 month at 0.87. I mean, below 1, guys, is supposed to be excellent price to sales. So right now, Polaris is looking pretty attractive. A much prettier picture when it comes to revenue for Polaris. For full year 2019, revenue was $6.78 billion, which was up 12% year over year from $6.07 billion in 2018. Net profit was down, however, last year, 2019, in comparison to 2018. We had $324 million, which was down 3% from 325. But as you can see there, from looking at what their expenses increased in, their loss in net profit was really due primarily to increases in expenses in marketing, R&D, and continuing to innovate their products, I'm assuming, and things like that, you know. So expenses that were necessary to position them to be better off in the future, I think. The company's vision, as we can see here, to fuel the passion of riders, workers, and outdoor enthusiasts around the world by delivering innovative, high-quality vehicles, products, services, and experiences that enrich their lives. So as we can see, Polaris, kind of revolves its brand around outdoor enthusiasm and empowering those that love the outdoors, which going forward could actually turn out to be a pretty profitable brand focus for them, considering what COVID has done to the consumer's appetite for travel and exploring the outdoors. There seems to have been a shift, with a desire for less flying overseas and taking cruises and things like that, and more of a desire for people to be outdoors, whether that be off-roading with ATVs, taking a cruise maybe with a bike or something like a slingshot, perhaps out in an RV, camping somewhere. So, there's a shift going on, and there's more of a desire and an appetite for the outdoors. It's becoming less niche, if you will. So their current brand focus and the cultural shifts that we're seeing due to COVID, mixed with what I think are the right choices to position themselves that Polaris has been making as of late, which we'll go into from the 2019 annual report, is going to make for a very profitable future for Polaris. Although they already are a profitable company, which is an important note to make, I still see continued growth with everything that they've got going on. To go into some of those choices that Polaris has been making to position itself for the future, as we look here at its 2019 annual report, its factory choice program is one of its many things that it's doing that just makes it that much better to shop with Polaris, that adds to that customer experience. Basically, they provide for you to customize certain Polaris products that you buy from them, so you can customize ATVs, slingshots, get different color parts from different, design parts, and it makes it just a lot more personal, a lot more fun. Reading straight from their annual report here, Polaris dealers can now offer uniquely personalized vehicles for each rider, which enriches the customer experience and deepens loyalty ultimately. Just to look at some statistics here, as we look a little further down the page, with this customization program, they've seen over 100,000 custom combinations for off-road vehicles and snowmobiles in 2019, 30% plus more profit opportunity for dealers that are selling Polaris products when they offer customization for Polaris vehicles. We've also got around 6,000 one-of-a-kind snowmobiles built in 2019. So people seem to be enjoying that feature and taking advantage of it, and I think down the road it'll only get more and more popular. We also see here they're making moves to put new distribution centers so that they're able to expand their capabilities and offer multiple Polaris brands in different locations. This one specifically looks like it's on the West Coast in Nevada. Another very important thing that Polaris is working on in order to position itself going forward is their commitment to getting people of all ages and from all backgrounds to fall in love with riding, as we can see here. It says here, in 2019, we initiated plans to further connect with a broader, more diverse group of potential Polaris riders. We invested significant time and resources to support inspiring organizations and events that bring new riders into the Polaris community. Polaris continues to look for ways to enhance the customer experience with regards to the products that they offer. Their group ride functionality has been making a lot of buzz. As it reads here, Polaris continues to integrate new customer-centric technology directly into our vehicles whenever it can enhance the riding experience. One example is the addition of group ride functionality into the ride command system. It reads here, this industry-first integration conveniently shows the precise locations of all riders in the group on the ride command screen. Riders can locate, navigate, and stay connected safely in real time without the need to stop and look at their phones. So if several people were out on Polaris ATVs with the ride command system, they could essentially see where everyone's at, stay in touch with each other in case anyone gets lost or out of sight, see where everyone's at on this display that's in the ATVs with this group system that they offer. And it's just another way that they're able to go that extra step for the customer. Another amazing thing that Polaris has been doing in order to gain traction with customers and continue to push their brand is offer Polaris experiences, which are basically what you think they'd be, Polaris planned events where people are able to get together and use their Polaris products, maybe ride around in ATVs together, ride around town in slingshots, different things like that. It says here, more than 108 million people live within a 45-minute drive of one of our Polaris Adventures excursions. This novel approach to ridership, the first of its kind in power sports, effectively removes the barrier of ownership for people who want to experience the exhilaration of riding. During 2019, our expanding network of local outfitters treated more than 135,000 people to safe and memorable adventures on the latest Polaris off-road vehicles, snowmobiles, and slingshot roadsters. Couples, families, and groups who rode with us came from a wide range of backgrounds, ages, and skill levels, and very few of them were already Polaris customers. Some facts there on their Polaris adventures: there were a total of 135,000 plus rides in 2019 across 130 different locations, with 90% plus of those customers being new to Polaris. So that's awesome because you don't have to be a Polaris customer to experience the products. You can go on a ride with some slingshots or go off-roading on an ATV and really get to feel what the Polaris brand is all about. And I'm assuming that down the road this leads to a lot more purchases of their products. So it just goes to show that Polaris is trying to position itself in every way it can to be an outdoor super brand in the future, where it's not just about their products, but them for the culture, for the experience, for everything that they offer all around. And Polaris has no intentions of keeping this culture and this brand within our borders. They have every intention of, in the future, continuing to pursue the global market and getting Polaris products as far out in the globe as they can. It says here, in keeping with our strategic objective to profitably increase international revenue, the Polaris global expansion continued in 2019. We made significant progress in building out our international footprint, including the expansion of our wholly owned subsidiary portfolio in overseas markets with strong demand and high growth potential. Some stats here: 2019 international business was up only 4% year over year, specifically up 6% year over year in the Europe, Middle East, and Africa region, and it was actually down 3% in Asia Pacific, Latin America. A lot of work to still be done outside of the United States, but that just rings a lot of good bells for me when I think about what Polaris will look like down the road. I'm not necessarily looking to jump in anytime soon, but I am watching it because it is a cheap company. The stock is cheap right now, and I think it's a good deal, and I like where they're going. But I'm just watching for now, not really looking to pull the trigger because it's not like I have all the cash in the world to go around to put it in anyway. So yeah, that's pretty much it for Polaris, ticker symbol PII. Check it out if you haven't looked at them already. And now moving on to the third and final stock that we're covering in our mid-cap growth stocks for today, guys. We have Revolve Group, ticker symbol RVLV. Servicing primarily millennials and younger, Revolve Group is an online fashion retailer. They offer mostly women's but also men's apparel with a variety of brands, both established, emerging, and even some of Revolve's personal brands. Looking at their investor relations page here, I actually wanted to read their own description of themselves for you guys. It says here, Revolve is the next generation fashion retailer for millennial and Gen Z customers. As a trusted premier lifestyle brand and a go-to online source for discovery and inspiration, we deliver an engaging customer experience from a vast yet curated offering totaling over 45,000 apparel, footwear, accessories, and beauty styles. Our dynamic platform connects a deeply engaged community of millions of consumers, thousands of global fashion influencers, and more than 500 emerging, established, and owned brands. What got me interested in Revolve primarily is the fact that this seems to be a fashion retailer that's steadily and constantly growing, whereas brick and mortar fashion retailers are having to close down a lot of stores, seeing declining profits. We recently saw at-risk bankruptcies like JCPenney and Macy's and things like that. So it's just crazy to see that Revolve has found a way to continue growing as Revolve seems to be moving forward in the world of fashion retail. The company was founded in 2003 and it's actually been profitable for 16 of the 17 years that it's been in business, 2019 being no exception. Net sales in 2019, as we can see here, totaled to $601 million, which turned out to be a net income of $35.7 million for 2019. And net cash provided by operating activities in 2019, they saw $46.1 million. Another crazy statistic to see here is that their average order value in 2019 was $275. Just to show you guys that these orders that people are making are no small price tag orders. And in addition to that statistic, 79% of their net sales were sold at full price in 2019, which means that they know what their customers want. They have products that people are willing to buy at full price. There's no need for a sale. So whatever Revolve has going on with their business model, it seems to be working and it seems to be keeping them profitable, which is crazy because they've cracked the code essentially for maintaining fashion retail in a profitable way. Gross margin for 2019, 53.6%, as you can see there. It's just crazy to see. I mean, I wish I had known about this company sooner, you know? But what's even more impressive than how Revolve did last year in 2019 is how they've been managing the COVID-19 storm this year so far in 2020. They released their Q2 earnings report 2 months ago on August 12th, and as we can see here, they did not have as big as an impact due to COVID as you might have thought. Net sales were down, but only 12% year over year, from $161.9 million last year to $142.8 million this year. But as we can see, net income is the showstopper here, as they were still net income positive. They saw net income increase from $12.7 million last year to $14.2 million this year. Who they have to thank for that is none other than their customers. As you can see here, they've had an increase of 13% year over year in active customers. Their average order value did go down, however, so it went down from 275, like we mentioned, to 204, which is still not too bad. That's still a pretty high order average, $204. So pretty impressive how they've been able to manage everything so far. As we can see here, Revolve was smart with adjusting for the types of products they offered during this time. It says here the highest year over year net sales growth rate so far in beauty products, intimates, and loungewear and accessories. As you can see, they even started selling masks at some point, which is genius. It says the beauty category saw net sales growth of more than 100% year over year in July, and that was the 4th consecutive month of seeing that, which means 4 months ago they wasted no time getting ready with the types of products they were offering and anticipating that they would have to adjust inventory levels for other things that might not sell as much anymore. But even though net sales were down a bit, their free cash flow looks ridiculous in comparison to Q2 2019 last year. They only had $2 million in free cash flow, whereas now they have $53 million sitting in cash flow. That is crazy. To look at a full-scale picture for the first half of 2020, net sales overall have been affected 3% year over year in comparison to last year, but their net income is still up 4% to $18 million in comparison to last year. Inventory has decreased, of course, which makes sense. As they adjust for things, they hold less of inventory that they think isn't going to sell. But the showstopper, free cash flow and net cash. Free cash flow is up to $61 million, which is more than all of 2019. Net cash sitting at $127 million, which is up 183% year over year. So what I basically just read to you guys is that Revolve is kicking butt with regards to weathering COVID. They made all the right moves, and the results of that were an increase in active customers and an increase in net income, ultimately giving them more free cash flow. Awesome results coming out of Revolve Group, guys, and I think that's one of the main reasons why they are on this video today. Of the 3 stocks that we're looking at, Revolve Group is the one that I'm most excited about and the one that I see most potential for in the short term. Currently having a market cap of $1.21 billion, as we can see there, and trading at a forward PE of 24.51. Not exactly super cheap considering the revenue that they bring in, but you know, it is an interesting valuation. I mean, it's not crazy. It's not the most expensive one we've looked at, let's put it that way. Price to sales of of 1.98. So again, it is a bit up there, but as we look at their financials, trailing 12-month revenue is 590 million in comparison to 600.9 million for full year last year. So I'm optimistic about the growth trajectory of this company, and I think the stock is one that could be argued will be trading expensively, going forward, maybe even in a few years, because it's a company that has a lot of growth going for it, and that's just the type of stock that it might be. What really impresses me about Revolve Group and what makes it possible for them to be net income positive and to be so good with their inventory is their business strategy with regards to how they manage their products. Rather than being your traditional fashion retailer, holding a bunch of different brands, and the ones that work sell and the ones that don't just keep marking it down until they do sell, what Revolve does is it uses a very data-centric and analytical way of determining what to hold and what not to hold. They essentially have algorithms programmed into their system that track what works and what doesn't work, so that they can double down on the styles and brands that do and get rid of the ones that don't. Revolve basically introduces over 1,000 styles on average every week onto their site, and what they do is use data and analytics to see what customers are leaning towards, what they're not, what people pay attention to, what's getting ignored, so that they can filter out the bad and keep in the good, essentially making Revolve a place that always has what their customers want. It's a crazy business model, and one that I think, like we've been talking about recently on the channel, is focused on data analytics. So it's something that's forward thinking, and Revolve knows the future is data focused. Revolve has beat analyst expectations 4 quarters straight now, and I am super excited for what's to come for the holiday season earnings report. I think they're going to do just as well as they've been doing before, if not better. Of the 3 stocks we looked at today, Revolve Group is definitely the most exciting in my opinion, and the one that could potentially have the most growth in the short term. Not necessarily telling you to jump into the stock, but I personally am watching it, and right now at its 17 and so price tag, it's not looking too bad for me. But with all of that said, guys, that's going to wrap it up for the 3 mid-cap growth stocks that I wanted to check out with you guys today. I hope you guys took some value out of today's video. Definitely some very interesting forward-thinking companies that have a lot of cool stuff going on, and that potentially in the few years going forward, a lot of opportunity with their stocks. So if you guys took any value out of today's video, I would really appreciate a like and subscribe, especially the subscribe, so you guys can join along for the ride and see all the content that I put out on a weekly basis. I appreciate each and every one of you for supporting the channel, and if you have a stock that you would like me to do a video on, or maybe you're a holder in one of these 3 stocks and you'd like to put in your 2 cents, leave a comment down below and let me know. I'd love to see more comments on the videos. But that's going to wrap it up for today's video, guys. Thanks so much for tuning in and supporting the channel. Until next week, this is Life with Dan.